Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 4th of January. FOMC December minutes take center stage. On Wednesday, the spotlight will fall on the FOMC minutes from the December policy meeting. At its last gathering for 2016, the Fed raised the federal funds rate for the second time in a decade, while the language of the statement was upbeat overall. Most importantly, the committee revised up its projected path for interest rates for next year, with the median dot now suggesting 3 rate hikes in 2017 from 2 previously. In the press conference following the decision, Chair Yellen noted that she was never in favor of running a high-pressure economy, which implies that the FOMC may not allow inflation to significantly overshoot its target and thus could accelerate the pace of its future hikes in such a case. What's more, she indicated that only some committee members incorporated greater fiscal stimulus in their forecasts. This means that once Trump's fiscal plans are laid out and all the FOMC officials adjust their expectations for greater spending, the rate path is possible to be revised even higher. As such, we believe that market participants will try to figure out to what extent did the officials discuss the scenario of increased fiscal stimulus and how that could impact the rate path moving forward. More hints that fiscal stimulus could lead to further upgrading of the dot plot are likely to add more fuel to the recent dollar rally. We will also dig into the minutes in order to get a clearer picture of the rationale behind the upgrade of the rate path projections, especially given Yellen's point that only few members took into account greater fiscal spending. Euro-dollar traded lower yesterday and fell below 10360 for a while after the US ISM manufacturing index for December rose by more than expected. Nevertheless, the pair quickly recovered to trade back above 10360. As long as the rate is trading between that key support zone and the 105 psychological area, we would consider the short-term outlook to stay flat for now. As for the bigger picture, we maintain the view that the medium-term path remains negative. The price structure on the daily chart has been lower peaks and lower troughs since the 9th of November. This supports that the bears are likely to take charge again at some point and perhaps aim for another attempt below 10360. A successful break this time would confirm a forthcoming lower low on the daily chart and is possible to open the way for the 102 zone. As for the rest of today's events, during the European day, Eurozone's preliminary CPI for December is expected to have accelerated to 1% year-over-year from 0.6% previously. However, following the higher than expected German inflation rate for the month, we see high possibility for the bloc's print to exceed its forecast as well. This could prove euro-positive at least at the time of the release. Eurozone's final service sector and composite PMIs for December are also coming out. Expectations are for the indices to confirm their preliminary estimates, and as such we don't expect any major market reaction from euro at these releases. In the UK, the construction PMI for December is expected to have risen slightly to 53 from 52.8. Given that the manufacturing index for the month rose to 56.1 from 53.6, we see the possibility for the actual print of the construction PMI to exceed its forecast. Something like that would confirm that the UK economy continues to perform well in the post-referendum era. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.